I'm Terrell Davis.
And I'm Harmon. We are two of the three partners with Davis & Harmon, LLC, the sales tax experts. DDH has been helping small and large businesses navigate the complex world of sales tax.
And along with that experience, we've built a pretty solid friendship too.
We created this podcast to share our knowledge, maybe find some money where you may have overpaid, or at least just break down the complicated stuff so that you can remain compliant.
And of course, we'll throw in a joke or two along the way.
We're glad you're able to join us for some sales tax talk, a chance to get to know us, and we promise that we'll keep it fun and lively.
Hi, my name is Terrell Davis. I'm a partner with Davis & Harmon.
And I'm Harmon, a partner with Davis & Harmon.
And today we're going to talk about what is sales tax. How many people have you run into that had no idea what sales tax is?
It's crazy because although everybody pays sales tax, people never seem to actually know what sales tax is.
Yeah.
Sales tax is simply a transaction tax that's being charged on goods and services. End consumers, people like you and me, they purchase things, and they get charged a sales tax. Businesses, when they operate and they buy things to operate, they typically get charged sales tax. There are some exemptions involved.
It's an industry, hundreds of billions collected annually across the states due to this one line item on your grocery receipt or your receipt as you go to different retailers.
Yeah.
And there's a whole industry surrounding that.
Every company that wants to do business in the state has to register.
Mm-hmm.
And that's to register to do business.
Mm-hmm.
And then with that registration, they agree, just in general terms, they agree to collect sales tax for the state from the customer, remit it to the state, so the state can fill their coffers to just do business, just to operate the government, build roads. And, some of these things may not be specific, but they're using the money to just operate the government.
Yeah.
There's a state tax. There are 45 states and the District of Columbia that impose a sales tax, a state sales tax. The ones that don't kind of refer to them as nomad. Mm-hmm. Sometimes you say, oh, damn. But that's a good mnemonic. It's Oregon, Delaware, Alaska, Montana, and New Hampshire. And I always have to use that to try to help myself remember what states impose a sales tax.
Yeah.
Or the ones that don't have a sales tax.
Yeah.
But here in Texas, where we're located, there is no personal income tax. Mm-hmm. So sales tax is the big deal. I think it makes up about 30% of the state's budget.
Now, how often do you hear when you mention to someone you're in sales tax? Do they not hear the sales tax part and they just they hear tax and the conversation ensues as income tax conversation?
That's normal.
Yeah.
Yeah, that's normal.
Yeah.
I mean, the federal government is the biggest government in the nation. Uh-huh. And everybody's a little afraid of the IRS. Mm-hmm. And so the minute they hear the word tax, no matter what other tax you mention, they think federal income tax. Yeah. And I had to make sure to let them know that although I know a little bit, it's just kind of like being a doctor, right? Doctors have specialties. Mm-hmm. And as you're going through school, you learn about different things when you're an accountant. Yeah. You learn about all taxes, but we're a specialty. We focus on sales and use tax. Use tax is just a complementary tax to sales tax to kind of level the playing field so businesses that are within a state don't feel disadvantaged to a business that's outside of the state. I started as an auditor where we were helping the state go out and audit companies to make sure that they were taxing the right amount, collecting it, and remitting it all to the state. What I quickly realized is that we don't have a lot of time to do the appropriate research on a company to make sure we get it right. Mm-hmm.
As an auditor.
And so the default is kind of, if it doesn't have tax, then you just schedule it and shift the burden.
Or if in doubt, tax it.
If in doubt, tax it. Yeah. And it shifts the burden over to the client. Uh-huh. And the client it's not their specialty.
Yeah.
They're trying to operate their business, and they're just trying to collect the money for the state because the state says this is what you got to do in order to do business here. And we come in and we say, all right, I'm on the other side now. I'm tax advisory. I'm no longer an auditor with the state. What we do is we dig a little deeper than what the auditor has the time to do. And this is not a knock on auditors. It's just they got a lot of they got a big inventory, and they just can't learn every company to the extent they need to. And we kind of go in and fill the gap, so to say. If you think about software, in Texas, software is taxable no matter if it's TPP, which is tangible personal property, something you can feel like in the old days where they give you a disc that was taxable. Well, in California, it wasn't taxable if they delivered electronically because there's no tangible personal property that's delivered on. So those are some of the nuances. And then if you kind of multiply that by 45, or I guess 46 with the District of Columbia, now you're talking about a lot of interpretations of something that seems like it should be pretty simple, and it's not.
As an auditor, or once I became a consultant, it was kind of enlightening for me to see how often the same transaction that was set up on the purchaser side, because when certain states, they'll audit the seller or the purchaser.
Yeah.
And so the idea that they can pick it up in both the seller's audit and the purchaser's audit was mind-blowing for me. And I think what's interesting to me also is that in a lot of cases, I've seen some auditors go the extra mile to try to help you out, but there's some states that put the burden on you where you have to go to that customer, vendor, and show that it was assessed in their audit before they'll. So it's, again, like you were saying earlier about putting the burden on the taxpayer being audited. They don't have that kind of reach, and the vendor can cooperate or not.
All states kind of say they don't want to double tax the same transaction, but in this process, it does get double taxed, and it becomes a challenge because the smaller businesses have the biggest challenge, and then you kind of get into a cost benefit situation. And
I think the big takeaway from this, is anyone who is going through an audit and being assessed, and they have a large enough customer vendor where that vendor has likely been audited, or even not necessarily smaller, but it's worth checking if the dollars are sufficient to checking with that customer vendor to see if they were audited for that tax, to see if they can get it removed on that basis. It's unfortunate that they put that on the client, but it is what it is. But that would be the takeaway from this.
So let me ask you some questions. I'm not gonna let you ask me all the questions so I can feel like I'm the interviewee.
All right.
How do you feel when it comes to why someone should come to us in the beginning of the audit as opposed to after they've been audited and then they want to bring us the schedules?
We can get a handle on things in advance. We can navigate, because there's only so many, any given audit, there's only so many ways you can do it. And there's a wrong way. The auditor is not necessarily interested in what way is to your benefit. It's kind of what's easiest for them, or whatever the case is, however they look at things. So if I can have a direct conversation with them, we can have a direct conversation with them about how they run their business, then we can kind of manage it accordingly and get through it most efficiently.
So them, you mean the business owner, the taxpayer?
Yes, exactly. And so as we encounter things that may look like challenges, we kind of get ahead of that. And so by the time it's time to deal with whatever taxing authority we're dealing with, that we're kind of prepared to deal with whatever the issue is. The other thing is, I think maybe more importantly, as you know, most clients, they want to do the right thing.
Yes.
And so in doing so, they'll have open, honest communication with the auditor. Well, what they don't realize is every question that's being asked is being asked for a reason. What may seem like a benign question.
Yes.
They're taking in information, interpreting it how they want to interpret it, and applying it in a way that you may not be aware of. And so as we hear and process and address the question that they're asking, we kind of understand what they're asking and know not to respond in a way that will be misleading to send them down the wrong path. And as opposed to, a lot of times we get schedules of things that shouldn't have been on there in the first place, because of something that may be miscommunicated or misinterpreted, whatever the case is. And so you have a bunch of things that on the schedules that if we were involved in the first place, they would have never made it on.
Auditors are trained. I know at least when we went through the state of Texas, we were trained to ask what we call open-ended questions. Questions that don't require a yes or a no. And so when that happens, a taxpayer who is not used to going through this, they're a little bit nervous, high anxiety. And again, like you said, they're not trying to cheat the state. Most taxpayers really want to do right. So with those open-ended questions, they tend to ramble and go on, and it's revealing a lot of information.
And they're nervous a lot of times.
Yeah. And so they give a lot of information, and the auditor, as we mentioned, does not have a sufficient amount of time to actually go and do all the research for a particular industry. So when in doubt, they schedule it. What we bring to the table is the ability to answer those questions with sufficient information for the auditor, but not more than what the auditor needs to kind of fish. And we keep things from hitting the audit schedules. Give me your thoughts on the mindset of an auditor when they have a high schedule, as in, where do you think they're willing to remove things off the schedule? When do they get tough as you start to decrease it?
If it's based on a situation where they weren't getting information and they just came up with something to get your attention, then that's going to be a little easier. If they've been going around the office talking to people and just kind of having random conversation with accounting personnel, and they think they have what is authentic responses and unfiltered responses, and they're basing this on that, which the person potentially was answering the question out in the wrong context, or they didn't understand the question. That's going to be a little more challenging. It's going to be a heavy lift to disprove a negative, essentially, in some cases, because it's something that they use information, because observation is one of the primary, a big form of a tool that they use in terms of doing the audit. So I don't know, that's a tough question to answer because there's so many variables that can kind of go into that.
Do you feel like the auditor is more willing to reduce and take things off the schedule when it's large, and then they kind of get their mind set on, okay, I have this big assessment. If they reduce it by 25%, I still got this.
Right.
And they've kind of arbitrarily set this number in their mind that this is when I'm going to get tough.
Yeah, especially I think that kind of plays a little more when they've invested a lot of time.
Yeah.
If they were in and out, they know they don't know much about the company anyway. So, they're a lot more open, but it's when which is why it's so key for us to get involved early, to keep them from investing time in places that are not productive.
That's what I was trying to get out of you. Get us in early, get somebody in early.
Yeah.
And I know that the money and the cost of getting us in may seem a little hefty at times, although we're definitely not the most expensive. The fact that it keeps the state off of you may actually benefit.
Yeah.
You do learn a lot about your own company. And I think one of the things that I feel like clients, taxpayers to the state, clients to us, one of the benefits that they don't think is that this cost that they're spending now actually reaches out for as long as they're in business.
Right.
They learn what they're doing right, what they're doing wrong. They learn how to judge cost benefit of things that may not be right, but just because of it's not practical. Sometimes the law is just not practical. Theoretically, everything is perfect, but the practicality of having to do something to be able to be in compliance with the state it's kind of tough. So we kind of help them be able to make decisions on the cost benefit of implementing a particular process or aspect that doesn't lend to a benefit on the compliance side. And so, we're not ever trying to tell anybody not to pay sales tax or whatever, but they may take this information and say, oh, if this means I got to pay the state extra 5% more, I can deal with that. I realize that if I make a purchase from a company that is not here in Texas and doesn't have any representation or presence in Texas, they won't charge me sales tax.
Right.
And then they end up maybe starting a business. And they register with the state to do business with the state. And they take that same mindset and they buy from a company or a vendor that's not registered in Texas, thinking that, okay, I'm not going to have to pay sales tax. And again, this is not a sales tax avoidance.
Right.
It's just lack of knowledge.
Yeah, I'm not seeing as much of that as I used to. So, but I've certainly in the past, I definitely can relate to what you're saying, where there was just an understanding that if you purchase it on the internet, it wasn't taxable.
Right.
And that's kind of how they looked at it in terms of it, and it wasn't. I don't know if they necessarily thought about it being out of state. They just thought about you purchase on the internet, right?
It wasn't taxable.
Right. And then there was a thing called the Internet Tax Freedom Act, which I think was misunderstood in terms of what that meant. But it didn't mean that the tax wasn't due, as you already know. It doesn't mean that tax isn't due eventually. It just meant that the states couldn't force certain internet sellers to collect. But which goes into your out-of-state thing. But I haven't had that conversation in a long time. But I know exactly what you're saying.
We're saying sales tax, but we know it's sales and use tax. And I mentioned this earlier, that use tax is the complementary kind of leveling in the playing field. So when a person purchases something online, and I'm kind of going back before the laws have changed, but this mindset still kind of exists because the purchaser, who may be a customer, just a person, end user, they may buy something online and no tax was being charged. And in their mindset, I don't have to pay sales tax. But when you become a business, even if you're a sole proprietor, even a larger company, when you purchase something online and no tax is being charged because the seller at one point in time may not have had the responsibility to charge you tax. As a business, you have to still accrue what would have been called sales tax is now a self-assessment of use tax. And you have to self-remit that on your own return. And so that was just something that was really put in place so that companies, because that's pretty much where the biggest enforcement is. It's hard to go and have enough resources to audit companies, much less every individual that's buying something online. I remember when we were helping companies, even when I was an auditor, I would be looking for some of that and saying, oh, wow, you bought something from another a company on, at that time we were auditors, there was no online, but you still had ways of getting to out-of-state companies, and they would ship it in to you, and you would get that knowing that they didn't have to charge you tax. But then that's that use tax self-assessment that you got to do.
Now, understanding where you were going with that, I would say that applies equally to offline sales, not necessarily just online sales, but whether it be a local vendor or out of state. I think when the vendor doesn't charge tax appropriately, and I certainly I get it, believe me, but what a lot of companies don't understand is that when the vendor doesn't charge you appropriately, they're on the hook for that tax.
Yeah.
So, that can happen. I see it very often as it relates to services, because there's a lot of nuance as it relates to services, and a lot of people, there's just a lot of fertile ground for auditors in that area. And so when that happens, whether it was shipped out of a phone call and they shipped it, or whether they purchased it from a local vendor who didn't necessarily, that's just something that I think a lot of companies don't realize, that they're responsible for paying tax on the purchases when they're due as well. So yeah, that's a conversation that I definitely continue to have.
We got to educate.
Yeah.
We got to educate people on sales and use tax,
Yeah.
how it applies. Let's think about one of the other benefits.
Mm-hmm.
We will help our clients in any capacity we can. If they want us to come in and manage the audit from beginning to end, we'll do that. We know that costs a little bit more.
Mm-hmm.
It does provide a better benefit,
Mm-hmm.
so to say, where we get the chance to really dig in and help them out in a broader sense.
Right.
But, again, the cost is something that needs to be considered. So we will often do a review.
As we talk about the cost, I mean, it's somewhat immeasurable because of the level of education that comes out of the process with us.
Yeah.
Because besides getting through that particular project, what they will walk away from with us is an education on how to do things going forward.
Yeah.
On a normal audit, as a DIY project, you're just not going to get that same level of education. You may see, okay, they schedule tax this, they tax that, but why did they tax that? Yeah. Is it really taxable? Should it not be on in the first place, right?
That's the key, because sometimes things hit that schedule. Because again, I'm saying this and repeating this purposely.
Mm-hmm.
Auditors do not have the ability to research every industry
Mm-hmm.
that they're dealing with.
Mm-hmm.
And so when in doubt, schedule it.
Yeah. Yeah. So the states generally, at some point, once they stop finding money on doing your audit, then you won't see them again.
Right.
So that's kind of an added benefit to getting what you need out of the process.
Yeah.
In terms of reducing those exposure items, right?
Yes.
Now, on the refund side, it's a rare occasion that an auditor will look for overpayments.
Right.
They see tax and move on. They're not looking to see if you pay tax on something that is not taxable, right?
Yeah. Yeah.
So that definitely that's an added benefit to that, to get any offset or any credits or refunds that you do.
And so I'm gonna kind of go back to my auditing days,
Uh-huh.
and the pressure to get into an audit, get it started, and get it closed.
Mm-hmm.
That turnaround time, there was a bit of pressure.
Mm-hmm.
You flip through, and you don't even look at the description
Right.
of what was
Right.
actually sold on the invoice.
Right. Right.
You just look at the tax line.
Right.
And if it has tax at the right rate,
Now you
move through it.
Yeah.
Doom, 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 doom.
Yeah.
I'm done with it. I'm only looking for the ones that don't have tax on them as an auditor.
Right.
I'm only looking for the ones that don't have tax to see if tax should have been on it.
Right.
Or again, when in doubt,
Yeah.
schedule
Yeah.
it. And those hit the schedule.
Uh-huh.
But when we come in, we're kind of doing this in reverse.
Right.
We know what the auditor is going to pick up.
Mm-hmm.
So we deal with those accordingly. But then we also look at the ones that the auditor just flipped through because it had tax on it.
Mm-hmm.
And that's where we see value.
Right.
We can reduce what you purchase and tell you that, oh, this is what you purchase, you shouldn't have paid tax on it for multiple reasons.
Yeah.
Taxable, non-taxable, and exempt from tax. In sales tax, goods, or what we may term TPP, tangible personal property, in the statute, it's set to be taxed unless specifically exempted.
Mm-hmm.
And when it's specifically exempted by statute, that's where I call it non-taxable.
Mm-hmm.
It's just non-taxable because the statute says it's exempt. Services, on the other hand, are in reverse. They're actually non-taxable by statute in most states unless the statute enumerates it or specifically says that it's taxable.
Mm-hmm.
Exempt are things in my mind that are taxable, but the state allows some exemption from tax, whether it be for resale, something you're buying to resell to somebody else.
An exception.
An exception. Exception to the rule. What's an exception that you think people miss the most? It's definitely not the resale thing. What about exemptions for people that they sell to that they don't even think about asking for an exemption certificate, or that person doesn't even think about providing an exemption certificate?
Mm-hmm. You kind of mentioned it's not resale, but in fact, resale was probably the most recent one that we dealt with. And this resale happened to be, it was a service provider that was providing what was a taxable service, but there's certain things that you use to provide the service that are what they might consider incorporated into the service. You can't provide the service but for this thing. Happen to qualify for the resale exemption. And so this recent audit we were working on for a client we were working with a senior consultant on, and she found more than I thought. We were having a conversation about taxability, and it led to exploring for refunds, and she found a lot more than I expected was going to be found.
Expound on a definition of resale so they'll kind of understand.
If you buy hats, as an example, and when you purchase those hats, you can issue a resale certificate, assuming you're permitted, issue a resale certificate, and then collect tax on the sale. So when you issue that resale certificate and not pay tax on those hats, then that's what's considered a resale exemption. As an example I use as it relates to services, if you are a web hosting, if you host websites, which some states actually tax. If you host websites and you purchase, you bill clients to host their website, but in providing that hosting service, you purchase data storage from a rack service that just stores data. In order to host that website, that data storage would be considered fully consumed in providing the service. So that would, again, qualify for resale, where normally web hosting in certain states or data storage would be subject to tax for the state that tax it. In this particular case, where you're incorporating it fully into the service that you're selling, a taxable service that you're selling, then you could issue a resale certificate and not pay tax on it. So that's what's the resale exemption. And so an example I used, the client was paying tax to the vendor on that service that actually qualified for resale.
You got a client that's web hosting, they're charging tax to their customer. They purchased this data storage to assist in hosting this particular taxable service, and the service has to be taxable to the end user. They are purchasing and paying tax on invoices to the data storage company, their vendor. That's where they should have been issuing a resale certificate, which means that that resale certificate allows them or their vendor to not charge them tax and not be on the hook with the state. And so that's a common thing where clients may miss potential exemptions because they're unaware that they even exist. And again, that's another good idea for them to come to us or someone just to help them out. I guess we can close it out there and make sure y'all come back and get a little bit more.
Always a good talk.
Yet again.